This is H4 time frame of gold. This was our bottom and this was our top. Bottom was made on FOMC and top was also made just before FOMC, and that was overbought bullish trend, and it has been ended with leading diagonal chart pattern. First it tested upper trend line just after CPI number. Then after FOMC meeting, lower trend line breaks. Now it is testing this lower trend line. So your trade this week first depend on this top 1824, which you can use as a SL. Then you can expect a counter trend correction whose first target will be 1730, which is near horizontal support level and below 38% retracement level, and then we have 50% retracement at 1719. So these two level are your support zone, and if you are looking for buy entry as a position trader, then you can buy at 1719, but below 1824 price is making a correction. Then after correction ends, a new high will come and target will be 1880 level, which is our next resistance. But upside target, to get accurate number, we will use few extension level when this correction is over. But before that target will be 1880 level. So this time frame 1824 is your resistance, and 1730 and 1720 is your support level. And after breakout and retest of this lower trend line, price can make a new lower low this week. And if we switch to daily time frame, then this bearish trend, which was based on Fed aggressive rate hike cycle, has been ended with double zigzag pattern, and this is your new bullish trend, and this trend has made 38% retracement. The next will be 50% retracement level at 1842. Then last resistance will be 61% retracement at 1896. But key horizontal resistance level where every trader will sell is this yellow rectangle. This is your key resistance zone. You can see last time they sell, and when this level was breakout they retest that level. Then after breakout again they retest that level again before this aggressive bearish trend. So these bulls will have their biggest challenge in this resistance zone from 1915 to 1868. So in this area these bulls can take profit and seller will sell, but below this resistance and above support 1730 it can make correction. Since it is daily time frame, to end correction it can take more time, but in the end that will be clear that it is zigzag or chart pattern correction. So this 1880 level is your resistance on daily, 1730 is your support, and right now price is testing this 1807 resistance level. So after correction it will easily break that level. If you compare both things on daily time frame, technical and fundamental. Then on this bottom on FOMC, Fed did 75 basis point rate hike, but on this top, Fed did 50 basis point rate hike. While in the past, on each FOMC meeting, it was going down. So trend has changed and new trend has been started because next Fed will do 25 basis point rate hike, then they will pause, then after that rate cut speculation will start, and rate cut speculation is bullish for gold all the time because in hike it goes down but in rate cut it goes up. So till rate cut it can stay up. When rate cut will start, then we will start selling, then gold will drop hard and we will see how low it will go from that high. But till then, correction in the middle and retest of 1880 is possible. And if we see monthly time frame, then from this bottom, when first rate hike came in December FOMC meeting 2015, and this was bottom before this bullish trend, and there was speculation that globalization will end and trade war between China and America will spread to all country in the world. That was speculation, but when this top was made, everything become real. Globalization has been ended for next 10 years, and that trade war between China and USA is now spread to every country in the world. So this was wave 1, 2, 3 and wave 4th complete. After this zigzag correction A, B, C, right now we are in 5th wave. So 5th wave will break this high and it will make new high. But people are still saying that it will come down, but wait for second before we knew what is the reason behind it. The future retracement level just for third wave, 50% retracement is done 16, 17 and price hit that level 3 times before making bottom. So if that level breaks and if it comes down because people think that it will go down, the next target will be 61% retracement level at 1509. So this is the maximum number price can go, but before that we need breakup of that level. In the past when it went up, that was recession, and now it is going up, that is stagflation. So last trend of recession was 30 years. When stocks go up, when Fed do easy monetary policy on name of QE, but in stagflation until this crisis over, stocks will only go down. While people think when stocks will go down, golds will go down. But in stagflation, opposite thing happen. Gold go up and stocks go down because there is low growth, high inflation, and that will start in 2023. So first 6 months gold will stay up. Then after next 6 months it can come down as a correction, but real selling will come when rate cut will start, when stock will drops and gold will drops at the same time. So real market crash will start after rate cut, but till then gold can stay up, and when rate cut will start, gold will start dropping again. And if we go back to H4 time frame, then this trend line is your dynamic resistance. It was tested 4th time and lower trend line is now broken and it is testing, so new lower low possible next week, but key support level will be 1720 level, the 50% retracement, and after retracement it will make new high. When price go below that level, then we can say sell and will target new lower low below that level. But macro trend next year 2023 gold is bullish, so after retracement you can buy again. And on economic calendar this week on Friday, only important thing is Fed PCE inflation number.